Namaskar. Welcome back. The topic I want to discuss today is Introduction to Accounting Standards. This is the first chapter in CA Inter Advanced Accounting. So, what is an accounting standard in the first place? Yeah, these accounting standards are written policy documents issued by the government in consultation with premier accounting body. So, in India, who is the premier accounting body? Of course, the Institute of Chartered Accountants of India is the premier accounting body. ICA will draft the accounting policies and it will be issued in consultation with MCA and NFRA. So, in ICA also, there is a board called ASB, called as Accounting Standards Board. This board in ICA will issue the accounting standards, which need to be followed by all the companies while preparing their financial statements. Okay? Good. So, why these standards are to be issued, or what are the benefits of accounting standards? There are majorly three benefits of accounting standards. One, standardization. Whenever a new type of transaction comes, we don't know what to do with it. Then a standard will be issued by accounting standard board so that everyone will be able to account that particular transaction in the books of account. Second, you may need additional disclosure. Additional disclosures while preparing financial statements. An accounting standard will ask you to do the disclosure. And finally, the third one, comparability. Yeah. Suppose there are two companies, say Infosys, which is in IT, another company TCS, which is also in IT, information technology. So, if I want to know whether Infosys and TCS financial statements, by seeing them, who is performing better, I am going to compare. For doing that comparison, both these companies need to follow similar type of accounting. If they follow the same accounting standard, I can compare the financial results of both the companies. So that is why these standards are important. Yes. Okay. So in India, till now, ICAI has issued 29 accounting standards from 1 to 29, of which two standards were removed by the ICAI. So as of now, you are going to study 27 accounting standards. The excluded standards are AS6 and AS8. Okay, good. So let's see what is accounting standard 1 now. Accounting standard 1 is disclosure of accounting policies. AS1. Disclosure of accounting policies. Accounting policies, I will mention AP. So, what is an accounting policy in the first place? Yeah? Want to try? Okay. So, in financial statements, there are many places where more than one type of accounting treatment is possible. So, which treatment you are going to follow is your accounting policy. Just for example, for charging depreciation, you can either follow straight line method or return on value method. Which method you are going to follow is your accounting policy. So the definition is like this. Accounting policies refers to the specific accounting principles and the method of applying those principles adopted by the enterprise in preparation and presentation of financial statements. So you are telling specific accounting principles and method of applying these principles while preparing and presentation of financial statements. These are called as accounting policies. Example, a company can follow either straight line method or written down value method for charging depreciation. A company can follow either FIFO method or weighted average cost method for valuation of inventory. So which method you are going to follow is your accounting policy. A company may follow straight line method. So their policy is to follow straight line method while charging depreciation and so on. Okay? Right. So which means you need to choose, a company need to choose which accounting policy they want to follow. So how to choose these policies in the first place? Whether to choose straight line method or return on value method? If I say I want to choose straight line method, why? Because I like straight line method? Not like that. There are three criteria with which you can choose an accounting policy. Criteria for choosing accounting policy. The three criteria are: number one, prudence. This is also called as conservatism. For example, if a person wrote the exam and the person knows that he is going to pass the exam, will he celebrate and give a party on the same day, or he will wait till the result and once the result is favorable then only celebrate? Yes, of course, he will celebrate after passing the exam. I will give the same question in another way. A person wrote the exam and he knows that he is going to fail. Will he start crying on the same day, or he will wait till the result and then start crying? He will cry immediately. So in life also, whenever there is a bad news, recognize immediately. Immediately. If it's a good news, don't recognize immediately. Future good news, actually not a good news. It's a future. Okay, a future bad news, recognize immediately. A future you may get a good news, wait till it happened. Wait and then recognize. Okay. If you are expecting a benefit in future, wait and then do. This process is called as prudence. For example, I purchased a land worth 10 lakh rupees. Okay. And because there is a metro project came beside my land value increased. So the land value increased to 1 crore. I have not yet sold. People are telling that it became 1 crore. I will still show in my books 10 lakhs only, and I will not show 1 crore because I have not sold. I should not recognize a future profit which is not yet received. Whereas I will do the alternate. The land value is 1 crore when I bought. For some reason, the value of land reduced to 10 lakhs. In this situation, even though I have not yet sold the land, I will still recognize the loss. From 1 crore to 10 lakhs, 90 lakh rupees, I am going to recognize loss. This is based on the concept of prudence. Okay? Yeah. Next, the second thing is substance over form. Over form. So in accounting, you need to book a transaction based on the substance of the transaction, not based on the legal forms sometimes. I will give one more example for this as well. Suppose I purchased a house by taking loan from HDFC Bank. Say for example, the value of house is 1 crore again, of which Harish paid only 20 lakhs, whereas HDFC Bank paid 80 lakhs. So technically, who paid more? HDFC Bank. But who is the owner? HDFC Bank or Harish? Of course, Harish. Even though legally HDFC paid more money, I am going to stay in this house. If it is given on rent, I will receive the money. I need to pay 80 lakhs back to HDFC Bank, which means the substance of the transaction is I am going to be the owner of the house, so it is going to be my asset, even though bank has paid more. So we need to select a policy by considering substance or form and prudence, and finally materiality. Okay, materiality means certain transactions you may not need to show in the books of accounts because of the nature or size of a transaction. This also I want to give an example. For example, asset. The definition of asset says an asset is a resource controlled by the company from which future economic benefit is received. So I have this pad. This is an asset for me because it is a resource controlled by me and from which I am going to get future economic benefit. So I will recognize this as an asset in my books of account. Same way, can I say that this pen is also an asset because this is a resource controlled by me and from which I am going to get future economic benefit. This is also going to be an asset. If I have to account for this as an asset, I need to do what? Pen account debit 20 to bank 20. And 2 years I need to do depreciation 10 rupees, 10 rupees. It is not worth it because the amount is immaterial, it is not material. So, what I will do as per my accounting policy, I will say any asset whose value is less than 5,000 rupees, I will expense it off instead of booking in my assets. Likewise, these three criteria is to be considered while selecting an accounting policy. Okay? Yes. So, this is the first part of accounting policies introduction and accounting standard 1, which is disclosure of accounting policies. I will continue accounting standard 1 second part, where I will cover further concept and a problem as well. Thank you for listening. Bye.